Fundstrat manager Tom Lee is still bullish and keeps his year-end target at 480. I wonder what he has to say about the increasing credit card delinquencies and weakening consumer.
That's being said, we know that there's a lot of political considerations and the potential for the Fed to cut rates next year, and the fact that rates are so low in the rest of the world that I think that those actually act as anchors to keep rates lower than we think they should be. And Mark Newton, our strategist, if 10-year yields keep falling, I mean, it's actually good for stocks.
Yeah. The other thing I thought was notable today, Tom, was some of the major macro strategists. B of A, title of their note, "We see a soft landing." This is a firm that last fall was looking for negative payroll growth for much of the first half of this year. And then this afternoon, JP Morgan's is not near, arguing that a recession in basically people who have been calling for a recession in 23 are running out of room, right?
Yeah, I think, I think that a lot of economists underestimated the dynamic ability of companies to adjust quickly. Last year, the Fed told every company to get ready for higher rates, and companies prepared for that, so they weren't tripped up overbuilding or a bullwhip effect. And so we've had a pronounced slowdown, but then we don't have to have the contraction because there's no inventory to work off and no massive layoffs. That's why when rates begin to cool and mortgage rates fall and inflation cools, it could be a pretty vigorous upcycle too.
That said, I wonder what your take has been watching names that do miss on earnings and how they've been significantly punished, I guess, and where that leads you in your playbook. I know you still like FANG, you like some elements of software, you like some elements of energy, and I believe even industrials, right, Honeywell?
Yeah. Well, Carl, I think if we're in a market environment where beats, stocks go up, but then when you miss, you fall big, it generally happens in two times. Either you're at the like you're about to go into a recession, or it's a market that has no oxygen. I mean, there's been almost no net inflows. Retail's taken $110 billion out of the stock market this year. Buybacks have slowed. Institutional investors are flipping bearish. So I think that means a narrow set of stocks have that support. That's really distanced and not connected to fundamentals. And I think if inflation's falling and fundamentals are turning, sponsorship of stocks is going to change. So I think that's more symptomatic of just low liquidity.
Right. Finally, you've made a name for yourself, Tom, I would argue, in recent years, making some outsized calls in either direction. It's been a good year for you so far this year. Are you in the mood to up your target year end, or are you going to hold your cards closer to the vest this time?
Well, sometimes it's timing, because I know some folks have been raising targets at the start of this month, but I was very wary. I'm very wary about the month of August, just because in my anecdotal experience, I felt like no one's ever made money in the month.
Tom Lee has been right so far in 2023, but personally, I think that the markets will take a downturn in the second half and into 2024 until the Fed cuts rates. What do you guys think?